Warren Buffett doesn't speak on politics often, but when he does, people listen. And this time, he isn't holding back. In a rare and direct statement, the legendary investor has commented on Donald Trump's new 25% tariffs on Canadian and Mexican imports, calling them an act of war.
The predominant tariffs they'll be reciprocal in nature. They'll be going on April the 2nd, so we'll be talking about that. It'll be a big game changer for our country because we've been ripped off by every country in the world. And now whatever they charge us 150, 200%, and we charge them nothing. So whatever they charge us, we're going to charge them.
Buffett, known for his long-term investment wisdom, warns that tariffs function as a hidden tax on consumers. He said in a recent interview that the tooth fairy doesn't pay them, meaning that the cost of tariffs will eventually be passed to consumers in form of higher prices for different goods and services. The 94-year-old billionaire stressed that economists and policymakers often fail to ask a crucial question, which is, and then what? This is a reminder that tariffs don't just impact trade, but ripple through prices, wages, and investment decisions.
So we look forward to April 2nd. I've been looking forward to that date for a long time. I had it as April 1st, but I didn't want to be hit for April Fool's Day. I'm a very superstitious person. So we made it April 2nd. It probably cost us a lot of money doing that, but it's okay. I feel better about it.
So what are some expected short and long-term effects of these tariffs? Which industries are expected to be affected the most? And where has Warren Buffett been investing his wealth recently? Since Trump's tariff announcement, markets have reacted sharply. The crypto markets, as well as traditional markets, have seen a major downturn, reflecting investor concerns over the long-term economic impact of a potential trade war. Even the US dollar took a hit as fears of inflation and economic slowdown grew amongst investors. This decline in the dollar's strength also raises concerns about future interest rate hikes, which adds even more volatility to the financial markets. Meanwhile, the S&P 500 and the Nasdaq 100 have both suffered losses as corporate earnings forecasts also took a hit. Goldman Sachs, for example, has warned that every 5% increase in tariffs could slash corporate earnings by 1 to 2%. As companies either absorb higher costs or pass them on to consumers. With fears of retaliatory tariffs from Canada and Mexico, investors are bracing for more turbulence ahead. Some of the main expected industries to be affected the most are the automobile industry, agriculture and food, manufacturing and retail, as well as energy and railroads. For example, imports from Mexico, which are a major source of fresh produce, could become more expensive, leading to price hikes at grocery stores. Major retailers like Target have already hinted that they may have to raise prices on these products due to increased costs. Even when it comes to manufacturing and retail, which are two industries that heavily rely on imported materials, could witness an increase in costs when it comes to sourcing materials from overseas. This includes everything from machinery and electronics to everyday consumer products. Some economists also hint that the tariffs that were imposed back in 1930 during the Great Depression have also exacerbated the problem and made it a lot worse. These tariffs back then led to a decline in U.S. imports and exports by nearly half and also contributed to reducing the GDP in the U.S. from $100 billion to $55 billion in 1933. Some analysts suggest that the current tariff wars could set the economy into a new major downturn, especially when we also take into consideration the global geopolitical landscape that is happening in Europe and the Middle East. This is also probably why many investors are turning to gold as a safe haven for what could potentially be happening later on.
The extending gains as President Trump's tariff plans fueled safe haven demand. Significant buying by central banks has also supported gold prices. In fact, prices surging in India, but it's not just physical gold. More investors are betting on paper gold as an investment as well. Data shows that investments in gold ETFs are on the rise, while demand for traditional jewelry has been softening.
When it comes to how Warren Buffett has been reacting to these tariffs and what's been happening recently in the markets, he actually has been selling a large amount of his portfolio and locking in profits on his investments. He sold billions of dollars worth of stock in multiple companies, including Apple and Bank of America. He is now sitting on a whopping $334 billion cash pile, which is held under his company Berkshire Hathaway. His actions reveal that he believes that the stock market is overvalued, and he is probably expecting a market correction by preferring to hold cash and waiting for the right opportunity instead of investing it. Also, he has been focusing more and more on investing in international stocks, some of which are Chinese, European, and Japanese. But despite these investments, Warren Buffett said in Berkshire Hathaway's annual meeting last year that his main focus remains in the U.S.
Our primary investments will always be in the United States. The BYD investment was a Well, we made the commitment in Japan, which I did 5 years ago, and that was just overwhelmingly, it was compelling. It was just extraordinarily compelling, and we bought it as fast as we could, and we spent a year, and we got a few percent of our assets in 5 very big companies, but that's the problem of being our size. But you won't find us making a lot of investments outside the United States, although we're participating through these other companies in the world economy. But I understand the United States rules, weaknesses, strengths, whatever it may be. I don't have the same feeling for economies generally around the world.
But overall, Warren Buffett's outlook on the economy and the impact of tariffs is clearly reflected in his recent investment decisions and actions. When he said that the tooth fairy doesn't pay these tariffs, he made it clear that he sees them as a tax on goods that can drive up prices and potentially disrupt global trade, which eventually are going to squeeze both businesses and consumers, especially in the short term. So that was it for this video. If you enjoyed this one, make sure to leave a thumbs up and to click the subscribe button below. And with that being said, see you in the next one.